Hello friends, welcome to my channel and thanks for watching this video. So another week has gone by and welcome to another session of USA Weekly Market Report. Now there has been a lot that has been going on in the global market and more specifically in the US market. Now if you remind or if you remember my last week's video on the US market report and more specifically on the comment that I have posted on the price chart or about the trend that the Dow is showing last week, it's still intact, and I would say there is a confirmation that has come in this week that has just gone by, that the market has an immense downside pressure and the upside momentum is not sustaining for the timing at least. Now, if you are looking at the recent developments, you will see that Dow Jones has actually how it has lost, and S&P 500 falls Friday, notches second straight week in losses in September slump. And strategy says extreme market moves are on the horizon. So take those profits. Now let's see. Let's open this one first. So Paul Gamble's co-founder of MG Group says investors should consider significant building up their cash positions. His comments came after market participants remain cautious given a further risk on the horizon. And there has been a lot, like Ray Dalio is also saying the same, that pile up your cash, don't hold any position beyond a group, beyond a certain period. Uh, and This company has evolved like anything in the past 8 or 10 days. These Chinese companies of indebted property from Evergrande, which is on the brink of default. So I think this is a 300 billion dollar worth of default, if I'm not wrong. Let's see. Evergrande. So yeah, so this is what you can see here. So Evergrande owns more than 1,300 real estate properties in over 280 cities in China. So as you can see, how big is this? And yes, it has over $300 billion worth in liabilities, the most indebted property developer. So there has been quite a lot that has been developing, or the news that has been developing over here. Apart from that, let's see if anything, because we have some developments from the Fed on 24th as well, and the last Friday was a quadruple witching Friday, and most of the people should know this, that this happens 4 times in a year, in the month of December, March, June, and September, where on the third Friday of this particular month will be a quadruple witching, which means everything will expire on the same day, the stocks, the futures, the options, everything, right? So it increased the market volatility. So that's why we can't consider, but overall the trend is not in your favor and it is moving towards the lower end of the range. So the better thing to do here is hedge your positions. Now, this is one more important, that as stocks enter volatile period, Fed will attempt to not rock the boat further in the week ahead. Let's see, the Federal meeting in the week ahead is important, and the big news may be its interest rate forecast. Some strategies says the Fed has worked hard to make meeting and news about the bond buying program as uneventful as possible. And beside the Fed's announcement, Wednesday housing data is on the deck, along with a few earnings, including FedEx and Nike. And now you have everything on the table. You have the Fed, you have the China default, you have the interest rate, you have the uh, bond buying program, which has been going downwards. So you have everything right now. Let's see how the market has been reacting. So this is the Friday's close, and Dow closed 166.44 points lower with a index price of 34,584. Nasdaq closed 137.96% at 15,043. The VIX has spiked up quite significantly. Okay, and then you have oil, which is firm. You have US 10-year yield, which is firm, and the dollar index, with an anticipation of interest rate movement, will again holding high and trading at 93.25. So there is a lot that has been going, but the weakest part of the all is this one, the Dow Jones Industrial Average. And I have told this thing last week, and I will say the same thing this week as well, that the support that we are looking at here for the time being on the daily chart is the 200-day moving average. Okay, so this is the chart that we are looking at here, and this is the level. So it is approaching, because the last week actually gave us a confirmation that the high probability is towards the lower end of the range, where we have our support at 33,291, and the upper end of the range is around 38,000. So rather than moving towards the higher end of the range, it is moving towards the lower end of the range. So the support level that we should look at going forward on the Dow Jones is 33,290, 291, and if it fall further, then we have to reassess the situation, because if you look at this trend, so it put pressure on the weekly chart as well. The weekly chart doesn't look good, and it further accelerates the downfall, and there will be an impact on the monthly chart that is quite visible, but it is not yet accentuated. That we will discuss later if that happens. And as far as the weekly chart, you will have your support, but at 32,445. So there has been some serious downside, which the chart of Dow Jones is currently indicating right now. So because Dow Jones represent a particular section of the market, but yes, because this is one of the important indices, and if it falls below the 200-day moving average of daily chart, or below 33,290, then it would be a problem. Now, as far as the Nasdaq is concerned, it is obviously one of the highly volatile index, and it will show you the same thing. So here we are. As you can see, the momentum is turning towards the lower end of the range. So that's the problem we can see here right now. But Dow Jones does not look as horrendous as the Nasdaq does not look as fearful as the Dow Jones, and the trend, I would say, is okay for the time being. So it is well inside your defined range or defined area. Here we are. So because nothing has changed, only the yes, here we are. So for Nasdaq, you have your support at 14,668, and on the upside, On the upside, you have 15,560. I would say there has nothing that has changed in the trend, because the longer term trend was something like this, where I have talked about 17,700. Okay, now if you're looking at this chart, it is moving higher, then going lower, then again goes up and down, and again it is trying to make a move which is towards the lower end of the range. So, but if in the chart of Nasdaq, you have your trend which is inside a range, I would say. But Dow Jones falling significantly, and it has broken all the important moving averages. That is also a negative thing that has happened. Okay, so Dow is looking much more weak when compared to the price chart of Nasdaq Composite. Let's go and check the dollar index, because it is something which one should know. And as you can see here, this is the daily chart of dollar index. It has again started moving on the upside on some anticipation because of the Fed. So market participants jumped up, and they have already started taking their positions, as you can see over here. So the position build up has already started happening, and we have certain resistance, and there are a couple of targets as well. So what we have here in terms of resistance, because dollar index has already started moving, so you will have 93.46 and 93.72 as your level of resistance. It's all obviously a target, but this is the resistance zone. If it crossed 93.72, you have 94.32 and 94.73 as your next set of targets. So you can understand the pressure, because we are talking about a currency, and that is not any other currency but the major currency called the dollar index. So if it moves $2 or $3 on the upside, then it will put a quite drastic pressure. It's not about its movement of $2 on the upside, but the scenario will change, because everything is linked with dollar. So the scenario will change, and you will see there are some sharp volatility which is about to come in the upcoming weeks, not only in the US market, but across the global market as well. So in that sense, the commentary by the Fed becomes very important, and we have to see how the market is going to analyze it, and is going to take it forward, how they are saying and what they are indicating. So this is one of the most important things. So we have a Dow which is trending lower, we have a dollar index which is trending higher, and both are inversely correlated with each other. Now the interesting thing is the crude and natural gas. So prices for both are increasing. So all the energy related sector are definitely making its move, and you can see here it's quite visible on the charts that yeah, we are. So there is a very steady move. So this is the daily chart of crude WTI futures, and there is a very steady move that you can see. And here the levels that we are looking at is 74.33 and 77.27. So these are the levels that we are looking at over here, and the price is not moving on the downside. And let's see the commodities. So okay, so this is the price chart of natural gas. This is the daily chart. You can see there is a phenomenal increase that has happened in the price of natural gas. 130% increase If base commodity increased by 130%, so everybody feels the heat, because when the the only person who is actually earning here is the producer, and after making a severe losses, that's fine, but who is going to suffer? The consumer, or everyone who is consuming the product is going to suffer. So the energy sector is on the move, and you will see how it's been working over here. So, and it has already tested the highs of 2013 or even 2009. It is trending, so it's quite fearful in the short term, because if the energy prices continues to move like this, then you will definitely have some serious problems. So what you have here is your stop loss at 4.9. If it falls below that, then you will have some corrections going forward, but if it continues to sustain over 4.9, you have your next to target, uh, which is in between 6.2 and 6.59. And furthermore, if it moves beyond 6.6 or 6.7, let's say, then the price will open up, starting from $10, and it can go up to 13.5. So there is still a room left for the natural gas price to move, and move quite significantly on the upside. So be very specific when you are looking at this particular thing, because the way it's moving, it's no stopping right now, I would say. So when the commodity prices are moving in such a way, and you do not have demand, so these two things must correlate. Otherwise, something will lose, something will go down in a very bad manner. So equity is right there in the center. Let's see what are the other things that are going to evolve. uh, and about VIX, so this is moving higher. This is definitely moving higher, and moving in a quite sharp manner, which is indicating that you will have very high volatility. See, VIX started moving higher, and if there is a very big crash in the market, let's say, when I'm talking about crash, I'm saying an intraday price movement, because the VIX went up higher. So if a 2000 or 3000 kind of move happens in a single day on the downside, it triggers pressure on both the side, on the long side as well as on the short side, because there will definitely be some people who try to do some bottom fishing kind of thing. So VIX moving higher is not a good sign, specifically for those who don't understand these things and who can't handle the volatility. But if you are new, if you can't handle volatility in the market, big volatilities in the market, then it's better to move out at least. That's what you can do. Okay, do not when you are in the sea and the weather is bad, it's better to save yourself, to go back to the shore rather than sailing around. So that's the thing that you need to understand now. Here you have your support at 14.22, and the first target that we have here is 29, and the big one is 48. We are not expecting 48, but at least because it is trading near 20, so 29 will not be a matter of concern for the time being. So there are lots of things that are there on the cards, whether you're talking about the global economy, the Fed, the growth, the inflation. You have the indices which is going down. You have the price of commodities which are moving up like anything, and I have shown you the natural gas, and the crude is very stable, and the VIX is moving higher. So you have hell lot of things that you need to cover in the upcoming week. But if you are indeed in a bull market, market will sail through. market will definitely sell through. Volatility will be there on the card, but market will sell through. Let's see how the price will perform, and then we will again reanalyze it and reanalyze it again and again, uh, to get more benefit to the viewers who are watching this video. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.